Hi, Daniel here with Value Investing with Daniel. This video is going to be a rant. I'm just going to talk and talk and talk, but I hope you pay attention to what I have to say. I'm going to show you how you could have avoided making this mistake. So if you bought Tesla stock, as you can see here, Tesla is down 73% roughly over the last year. Over the last 6 months alone, it's down about 53%. If you bought this company, I'm going to show you why buying it was pretty much as dumb of a move as a person could possibly have done. But going back 6 months, going back a year ago, going back whenever you could have bought into the company, if you did, chances are you were making a mistake and you were buying it for the wrong reason. So, like I said, this video is going to be a little bit of a rant. I'm going to try and not insult you, too much if you bought into Tesla, but I want to show you why it was a mistake so you can learn. So moving forward, you don't make the same mistakes over and over again, because it's one thing to make a mistake. It's another thing to not learn from the mistake and learn why you made the mistake. So if you bought Tesla or you're thinking of buying Tesla, and you see what happened to it over the past year, past 2 years, past 6 months, and you choose not to watch this video, then you made a mistake and you're choosing to make a second mistake, because I'm going to show you why buying into it was a bad idea. First, we got to explain what buying a stock is. When you're buying stock, you're buying into a company. You are now an owner of a company. Okay, that is the first thing that you have to realize. You are buying a company. Just like, now I'm going to use an analogy. I want you to imagine your neighbor on the nearby in a plaza is selling his pizza shop. He's selling his pizza shop to you, and the pizza shop makes $200,000 a year. Now, I want you to bear with my analogy and think very clearly for a second, because if you bought this and you lost money, it's your fault. I mean, there's nobody else's fault. If you don't do your due diligence and you don't learn from your mistake, though, that by definition is not very intelligent. So listen to the analogy. I want you to play it out. I want you to think in your head what it is that I'm saying to you. So I want you to imagine you have a neighbor, some guy, he's selling you his pizza shop. The pizza shop makes $200,000 a year. $200,000 a year. So the pizza shop makes $200,000 a year. He's selling you the pizza shop. How much are you going to pay for the pizza shop? It's making $200,000 a year. You figure, well, maybe I'll pay, three times that amount. Maybe I'll pay him, 600,000, which is three times worth its earnings. Or maybe I'll pay 800,000. The pizza shop, mind you, is making 200,000. So you're probably going to pay him when you sell it. When he sells it to you, he's going to want at least a couple years worth of income. So it's making 200,000. So you figure, maybe I'll pay him 1 million, which represents, 5 times the pizza shop's earnings. Maybe you figure, with the right investments in advertising, this pizza shop can make $400,000 a year, not 200,000. So, maybe I'll pay him $2 million for it, which is 10 times its earnings. So you got to think, there's a pizza shop making $200,000 a year. The pizza shop is, you got to figure how much you're going to be paying for that pizza shop. You say, you know what? I'll pay 2 million for it, which is 10 times its earnings. So you're buying the business, the pizza shop, for 10 times its earnings. It's the same thing when you invest in stocks. What you're looking at is how much the company's going to be making and comparing that to what it's selling for. So let's look at Tesla for 1 second, okay? We're going to look at Tesla. Like I say, I'm going to do my best to break this down for you so you can see why, if you bought Tesla, you were not very smart. But learning from your mistakes is important. So let's go through it very, very simply together, okay? So I got Tesla here on Yahoo Finance, and if we scroll down here, we can see the amount of money that it's made, over the last couple years and so forth, right? We can see in 2021, Tesla made $5.5 billion. Now, I'm not going to worry about adjusting earnings. I'm not going to worry about any of that for now. All I'm going to look at is the pure reported earnings, nothing more, nothing less. In fact, to make it easier, we're going to look at the earnings per share of Tesla. In order to do that, what I'm going to do is I'm going to go to my Y charts here, go to data, and type in earnings per share, normalized and diluted. So this is the amount of money Tesla makes per share. In fact, let's look at the annual numbers. So here we can see the amount of money Tesla makes per year. I'll just close this window here. So as we can see, in 2021, Tesla made $1.63, $1.63 per share. $1.63 per share. And we could see, it's going up. Sure. Yeah, it could continue to go up, let's assume. But it's making $1.63 per share. Now, we compare that to how much Tesla was selling for. Let's go back, let's go back, yeah, a year from now, and we can see at some point, in 2022, Tesla was trading around $300 per share, roughly. You can even be a little bit more generous and say it was trading around 250. So let's say you bought Tesla at $250 per share. So we got to look at how much was it making. So Tesla was making in 2021, in all of 2021, over the entire year per share, it made $1.63. $1.63. Okay, actually, we'll do it like this. You're paying $250 per share, let's say, if you bought it at 250, divided by $1.63 means you're paying 153 times what it was making. This is the equivalent. I want you to imagine the pizza shop analogy that we were discussing earlier. The pizza shop made $200,000 a year. This is the equivalent of you paying $30 million for a pizza shop making $200,000 a year. Does that sound like a smart investment? No, it doesn't. So you got to think when you buy something, how much is it making? How much can it reasonably make? There is no way Tesla would ever make you your money back at $1.56, whatever it was making per share, if you're paying $250 per share. So this is the most simple test you can do. How much is the company making? I'm not even talking about adjusting its earnings and this and that. Just look at how much it's making. Look at how much it costs and compare the two. If you do that and you don't buy things that are, more than 20 times earnings, chances are you're at least headed on the right track. Obviously, there's a lot more to investing, but this is a good place to start. You got to see how much the company is making, even at this current price, which has fallen, like I said, like 72% at $107. If we look at how much Tesla's made, let's say earnings per share. So we can look at earnings per share. Over the last 12 months, Tesla made $3.27 per share. So it's really gone up. But if we divide the current price of 107 divided by the earnings per share of $3.27, we get a current multiple of about 33, which you can see here. That's the PE ratio that I'm discussing. What I'm talking about is the PE ratio. At 33, it's still extremely high, too high to be any rational investment. So the point of this video is, it's not to shame people, it's not to blame people. I mean, ultimately the blame is yours if you made a bad investment, but I want you to learn from your mistakes. Don't buy companies that are making $3.27 per share for 33 times what they're making. It's a bad investment. And if you bought Tesla at 250 per share, you really made a bad investment. But I hope this video helps clarify some things for you. Subscribe, learn more from my videos. I really feel like I have a lot to offer the investing world. So please subscribe, like the video, comment, tell me what you think. And if you have any questions, ask them in the comment section below. I hope your investing career goes better for you. If you bought Tesla at $250 per share, I don't think you're going to be making your money back anytime soon. But yeah, subscribe for more. Thank you for watching and take care.